Hi, a warm welcome to everyone. We have today a topic by PKF on the voluntary disclosure and amnesty for indirect tax. Let me introduce myself. I'm Sean Chia from the Malaysian International Chamber of Commerce and Industry, the Executive Director. We are one of the longest established chambers in Malaysia, advocating since 1837. We might be more than 100 over years old, but we keep up with the times. And this is continually sharing of expertise with our members. So before we start, some housekeeping rules. Those of you who are logged in to Facebook, you can leave your questions and questions on the messenger, and we will try to answer them as much as we can. And those on Zoom, you can put it in the chat group. All right, so without further ado, today we have two tax experts from PKF. The first speaker would be Mr. Phan Ka Seong, the tax director of PKF. And with him is his colleague, the tax manager, Mr. Pan Hong Kit. Right, so over to you, Phan. Are you ready?
Yes, I'm ready. Thank you, Sean. First of all, thank you to MICCI and also Sean and Anisha for organizing this webinar for us. And I would like to do a little bit of intro about myself and my manager, Hong Kit, before we start the program today. Myself, I have been with PKF since 2016. And I've been with the tax profession for more than 36 years now. My fellow colleague, Hong Kit, he has also worked in the Big Four for more than 8 years before he joined us. A little bit about our PKF. I believe we have played a video clip about PKF for you at the background before we start this session today. We are an international accounting firm. We are now around 55 years old globally. We have offices in East Malaysia and West Malaysia. Our HQ in the East Malaysia is Kota Kinabalu. HQ in West Malaysia is in Kuala Lumpur. We have about 250 staff nationwide, with about 80 in Kota Kinabalu. Okay, as I said, we are going to share with you this morning about this voluntary disclosure and amnesty program, which is introduced by the customs. It has been running since January until now. We will talk a bit more by Hong Kit about the period and the rest of the benefits of this program later on. I will come back to touch about the common errors faced by businesses and what are the steps we can do to help us to prepare for the voluntary amnesty program and also going forward. So that is really our short outline for today. And I will now pass on to Hong Kit to share with you the rest of the program, the VA program that we are concerned with today. Hong Kit, you okay, Hong Kit?
Yep, thank you, Ka Seong. And good afternoon to everyone who is watching this from Facebook or watching this from the Zoom platform. So I will touch on, I will introduce what is the VA program, and I will touch on further details regarding the VA program. So as you are aware, this VA program has actually been implemented since the 1st January this year. And it will be implemented until the end of September. And currently where we are at now, it's been 4 months since the implementation of this VA program. And we are looking at a remainder of 5 months before we see the end to this program. So this VA program consists of voluntary disclosure and amnesty. That's why they call it VA, V for voluntary disclosure and A for amnesty. So this VA program actually covers any indirect taxes, duties, penalties, or surcharge on or before 31st October 2021. So what are the types of indirect taxes actually being covered? Consists of service tax, sales tax, the SST, the excise duty, the tourism tax, the departure levy, the import and export duties, as well as the GST, goods and service tax, which has been repealed in 2018. So just a brief background on this voluntary disclosure. It is not something new for indirect taxes, because without this program, taxpayers can still do a voluntary disclosure, despite it being in a manual manner, where taxpayers they actually need to write into customs to actually voluntarily disclose any undeclared taxes and seek for any waiver of penalties. Of course, voluntary disclosure program as an official program is the first being introduced by customs, with a guaranteed incentive and remission, unlike the manual voluntary disclosure, where there is no guarantee to any sort of penalty waiver by customs. So it's upon the discretion of customs. But under this program, it is a blanket remission, and it is a guaranteed incentive. So why customs is implementing this VA program? So similar to why IRB actually implemented this special voluntary disclosure program back in 2018. This customs is actually introducing this VA program with the aim to actually reduce any tax leakages, which actually reduce the national revenue. Moving on, it is also to encourage taxpayers to improve on tax governance, so to be more compliant towards the indirect tax legislations. And of course, it's to encourage taxpayers to make any settlement of any undeclared taxes by giving them an attractive remission of penalty, as well as a partial remission of the principal tax. Now, going into the scope of the VA program in more detail, like I've mentioned, this VA program actually covers any indirect taxes which are unpaid or remain outstanding on or before 31st October 2021. So anything that is outstanding or underdeclared after 31st October 2021 would not be eligible under this VA program, and taxpayer would then need to actually write in manually to customs to disclose such undeclared taxes. Of course, what is not excluded also would be any indirect taxes which are being or have been investigated by the Enforcement Division of IMCD. That will also not be included in this program. Same goes to companies or individuals who have been approved for remission by the Ministry of Finance. So that would be a separate incentive being offered by the MOF, and hence would not be eligible under this program as well. Now let's look at the framework and benefits of the VA program. So some of the benefits that are being stated or being promoted by customs are things like blanket approval for the remission of penalties and tax duty or levy, which I will touch on that more later. Customs is also saying that any activities or audit coverage periods on or before 31st October 2021 that have been disclosed in this VA program will be accepted in good faith and will not be audited for a period of time. As information related to the disclosure will also be kept confidential by the IMCD, and they will not share it with other tax authorities or other authorities. So that these are some of the incentive being promoted by customs to actually attract taxpayers to enroll for this VA program. Now let's look at what are the incentive as well as the conditions of the VA program. So this VA program, like I've mentioned, it runs from 1st January 2022 until 30th September 2022 for a duration of 9 months in total. Within these 9 months, there are actually 2 phases, which is what we call phase 1 and phase 2. So phase 1 of the VA program actually runs for a longer period of time, for a duration of 6 months. If you can see, as you can see from the table here, it runs from 1st January up until 30th June 2022. Whereas phase 2 will run from 1st July until the end of September 2022 for a period of 3 months. So what are the difference between phase 1 and phase 2 is that phase 1 taxpayers will be able to enjoy a higher percentage of remission of penalty as well as a higher percentage of remission of tax. Whereas in phase 2, the incentive will be reduced to half of the phase 1 incentive. And of course, when it comes to the payment of the VA program, which I will touch more on that as well later, full payment must be made within the above stipulated phases, the period of the phases, in order to enjoy the above benefits, the benefits of the remission of penalty as well as the taxes. Now, some of you may ask, what is the difference between voluntary disclosure and amnesty? So voluntary disclosures are actually errors that are not known or not discovered by customs yet. So they have not gone to the company to conduct any verification. They have not done any audits, and but taxpayer is taking the initiative to actually voluntarily disclose such errors which are not known by customs. Whereas under Amnesty Program, customs actually has performed some verification or some audit towards the company, and they have identified the offenses which leads to any under-declared taxes, and they have issued a bill of demand to the taxpayer for the outstanding taxes. So that is for amnesty. So who is eligible? For voluntary disclosure, it can be any companies or individuals, even before, during, or after an audit stage. So I'll explain more on that later. Whereas under Amnesty Program, it will be any company or individuals who have been issued or will be issued with the BOD. Who would not be eligible under this VD? Like I've mentioned earlier, companies or individuals where duty or tax remission has been approved by MOF, this would not be eligible under the VD. Whereas under Amnesty BOD, which has been issued for the period after 31st October 2021, that will also not be eligible under the Amnesty Program. In terms of application, both voluntary disclosure and Amnesty Program, they actually share the same application form and the same application method. So I will touch on the administrative part in the later stage of this presentation as well. Now let's move on to the eligibility for this voluntary disclosure program. So this voluntary disclosure program actually covers companies or individuals who have registered and performed the following activities, such as the taxpayer has submitted the nil return incorrectly, have not submitted any return or declaration, have under-declared or underpaid any duty, tax, or levy, have charged tax on goods or services that are not supposed to be subject to tax. Moving on, companies or individuals who are liable or to be registered, but they have not registered, but somehow they have also collected the tax and have not paid the tax to customs. So these companies will also be eligible to disclose such errors in the program. Next, companies or individuals who are not liable to be registered, but have incorrectly collected the taxes and have not paid the tax to IMCD, to customs. Moving on, this is also quite common. companies or individuals who have acquired imported taxable services under the GST Act. Back then in GST, we have this concept of imported services as well. Same goes to the current Service Tax Act. We also have these imported taxable services, and many companies, they actually failed to account for this service tax on the imported taxable service. So that they would also consider to participate in this voluntary disclosure program. Now, this program also covers other taxpayers such as importer or exporter, local excise manufacturer or licensed manufacturing warehouse, licensed warehouse who have underpaid any duty or taxes during import and export declaration. They have used the incorrect tariff code. They have utilized an exemption, but they have not met the conditions. It also covers franchise holders of a franchise for CPU vehicles. Now, looking at this VD program, like I've mentioned earlier, companies who have not been audited or they are in the process of being audited, as well as if they have been audited by customs, they can still apply for this voluntary disclosure program. Of course, in the respective stages, the audit officer will actually notify the taxpayers, the companies, whether they want to participate in this program. And if they do, then the audit process, they will stop the audit process, and they will let the taxpayer to actually apply for this VA program. So for companies who have not been audited, but is actually listed for an audit, for example, listed for an audit in this year, so customs, the audit officer will actually notify the taxpayer that they will actually initiate an audit at a later stage or at a specified period of time, and they will actually ask the taxpayer whether they want to enroll for this VA program. So if the taxpayer choose not to enroll for the VA program, which they would need to provide the feedback to the audit officer within 21 days. And if they choose not to enroll for the VA program, then the audit officer will continue to initiate the audit as usual. What about companies or individuals who are being audited? So let's say an audit has been initiated by customs already. They have visited the taxpayer's office. They have requested the documents, but they have not issued the letter of notification or the audit results to the taxpayer yet. So if the audit results have not been issued to the taxpayer can still apply for this VA program. And if the taxpayer wishes to do that, then the audit officer will have to stop the audit, although they have initiated the audit. So they again will let the taxpayer to provide them the feedback within 21 days as well. And if the taxpayer chooses to enroll for this VA program, then they will need to stop the audit immediately. Well, for companies or individuals who have been audited, they can still go for this VA program to actually disclose anything that was not discovered by customs. And of course, by doing so, customs is actually saying that they would not audit the companies for a period of time. So as you can see here, activities or audit coverage periods that are not disclosed in the program and audit periods after 31st of October 2021, customs will only initiate the audit 2 years later, starting 1st October 2023. Now, so previously I've talked about the voluntary disclosure program, the eligibility for voluntary disclosure program. What about the amnesty program? So the amnesty program is, of course, is applied to taxpayers who has arrears of indirect taxes on any BOD issued for the coverage period up until 31st October 2021. So anything after that for after the period of time, then the taxpayer will not be eligible to under this amnesty program. And of course, if there are any payments that have been made for the bill of demand before the application for the VA program, Customs is saying that they will not refund the payment that have been previously made already for the bill of demand. So under this program, they will only take into account the balance of the BOD payment. Now let's look at the incentive being offered under this VA program. So as you can see in the table here, a blanket approval will be given for the remission of penalty or surcharge. So we are looking at the remission of the penalty portion. So in most qualifying cases, under phase 1, Customs is saying that they will waive 100% of the penalty. Whereas under phase 2, the incentive will be cut into half, where Customs will only waive 50% of the penalty. Whereas for the amnesty program, where BOD has been issued, the penalty portion, as stated in the BOD under phase 1, Customs is saying that they will waive 90% of the penalty in the BOD. Whereas under phase 2, it will be slightly lesser, it will be 80% instead. Okay? That is for the penalty portion only. What about the tax, the principal tax portion? So as you can see, the principal tax portion applies to registered person who fail to submit the return, submitted an incorrect return, submitted a nil return, or underdeclared the tax in the submitted return. Under phase 1, a 10% remission of tax will be given. Whereas under phase 2, it will be half, which is 5%. So it also covers other scenarios which I've talked about earlier. So person who are liable to be registered, but they registered late, or they have not registered. Person not liable to be registered, but they have incorrectly imposed and charged tax, but they did not pay the tax collected to Customs. Person who imports services but failed to declare the service tax on the imported taxable service. Person who is an importer, exporter of goods, but they have underdeclared the taxes or duty for the importation or exportation transaction. Same goes to the importer, exporter who have incorrectly declared the HS tariff code on the goods imported. Person who have been granted an indirect tax exemption or facility, but they did not fulfill the prescribed conditions, or they have utilized the wrong exemption. So all these offenses under phase 1, 10% remission of tax is guaranteed, whereas under phase 2, it will be 5%. So same goes to person who have been issued with BOD. For the tax portion under phase 1, it will be 10%, whereas under phase 2, it will be 5%. And as you can see here, the incentive actually increased for person with AP license, or for vehicle manufacturers subject to excise duty. So under phase 1, this will be 20%. There will be a 20% remission of tax, whereas under phase 2, there will be a 10% remission of tax, slightly higher. And moving on to the maximum remission of penalty, which is 30% for phase 1 and 15% for phase 2. This applies to persons who are liable to be registered, but failed to register and has not collected any taxes, duty, or levy from customers. So the taxpayer who is under this category would actually would be able to enjoy the highest incentive rate for the remission of tax, which is 30% under phase 1 and 15% under phase 2. Now, more on the administrative matter of this VA program. So, customs will actually impose a compound on each VA application. So the compound is divided into 2 categories, as you can see in the slides here. 1,000 ringgit for any voluntary disclosure amount, which is more than 100,000 ringgit, whereas a lower compound of 500 ringgit for any voluntary disclosure amount less than 100,000 ringgit. So this compound is a must, and taxpayer will have to actually pay the compound in order to enjoy the benefit under this VA program. So this compound is actually quite similar to an application fee for the VA program, and it goes by per application. More administrative matters, I will touch on the application process. So the application for this VA program can be done online, and it's via this form VA01. So once the application has been submitted to customs via the online portal, then customs will actually look through the application, and they will provide the approval for the application, which is what we call the form VA02. So under the form VA02, it will actually state the undeclared taxes that has been disclosed by the taxpayer, that has been declared by the taxpayer, as well as the whatever applicable remission of the penalties and the tax, how many percent, it will be stated in the VA02, and that is where a taxpayer would then know how much to pay to customs, and of course they will need to pay within the respective period of the phases, either phase 1 or phase 2, to actually enjoy the incentive, the respective incentive under the respective phases. So once payment has been made, everything has been settled, where customs has actually received all the payment, then they will actually issue a certificate, VA03, to actually signify the completion of this whole VA application. So taxpayer can also choose to withdraw from the VA program if they want to, but at a specified period of time, meaning to say before the form VA02 is issued. So after the form VA02 is issued, then taxpayer would not be able to withdraw from the VA program. And of course, during the whole process, if there's any payment that has been made to customs already under this VA program, and where taxpayer suddenly would like to withdraw from the VA program, then customs is saying no refund will be given for such payment that has been made already. Now we'll touch on the payment rules, which is actually equally important under this VA program. So the full payment of duty, tax, or penalty surcharge must be made according to the respective phases. So as you can see here, phase 1 ends on 30th June 2022. So the payment deadline also follows the end date of the phase 1, which is 30th June 2022. And customs will need to actually receive the entire payment within 30th June 2022 in order for the taxpayer to actually enjoy the higher incentive under phase 1. If the taxpayer chooses to enroll or to pay the tax under phase 2, which ends on 30th September 2022, then they will need to actually make the payment before 30th September 2022 to actually enjoy the remission incentive under phase 2. More on the payment rules applicant is required to make the payment in full during within the specified timeline under the respective phases. So let's say, just giving you guys an example, let's say the taxpayer actually enrolled under phase 1, but they are only able to make the full payment sometime under phase 2, meaning to say between July up until 30th September 2022. So although they've enrolled under phase 1, however, customs only received the full payment sometime in phase 2. With that being said, the taxpayer will only be able to enjoy the incentive under phase 2 and not under phase 1. So some people may also ask, what if they do a installment payment or payment in batches? So that is also allowable by customs, so long that the full payment is actually received within the period of the respective phase. So although, for example, let's say if the taxpayer made some partial payments in phase 1 and some partial payment in the balance of the payment in phase 2, given that the full payment is only received by customs in phase 2, then the taxpayer will only be able to enjoy the incentive under phase 2 and not phase 1. Moving on, once the taxpayer has actually made the payment, they are required to upload the proof of payment in the MyVA system, and that will actually customs will actually see the proof of payment to actually make sure that they have received the payment officially. Other payment rules include a redirect of payment from this different system will not be considered. And as you can see here, like I've mentioned earlier, partial payment is allowed. However, they will only consider the incentive rate under the respective phase if they have received the full payment, depending on when they receive the full payment. Is it under phase 1 or under phase 2? Now I pass back to Kasiong to discuss on some of the common considerations or common errors for this VA program, as well as some of the actions that can be taken by businesses.
Thanks,
Kasiong.
Thanks, Hongkit. For the remaining session, I think we have until 1:30 to complete our session today. So I believe we will have enough time for Q&A at the later stage. So I'll try to, before I go to each of the common problems in each of the taxes that we have on the slide, I will just touch a little bit about the background of each of the tax involved, so that we have a better understanding of why these errors can happen during our work when we do our review. Let me start with the sales tax first. I think in Malaysia, we have sales tax since 1972. It was only abolished in 1st of April 2015 when GST was introduced. Actually, sales tax is a tax on licensed manufacturers in Malaysia that are producing taxable goods, right? And depending on the classification of the goods, some of the goods will be taxed at 5%, some will be at 10%, and for those who are exporting, the tax rate will be 0 rate. Yeah, and it goes by for those who are licensed manufacturers, they're able to apply for exemption on their inputs. So whatever inputs used in the production, they can entitle to sales tax exemption, right? And for some businesses or persons who are manufacturing at locations, say in the free zone, MW, or commercial zone, or some of the designated areas like some of the duty-free areas, they are also not subjected or not liable to sales tax. And also, apart from the licensed manufacturers, all importers, I mean all importers in Malaysia, when they import goods into Malaysia, as I said, depending on the tariff codes of the goods, all these taxable goods, when they import, are also subject to sales tax. Yeah. So this is how the sales tax, our Malaysian single stage sales tax, work in Malaysia, right? So once you understand that concept of sales tax, then you may understand why some of these errors can happen, right? Because many companies that we carry out an audit will find that they claim they have a lot of exemptions on their license or on their allocations in the free zone or MW, but some of the errors they make is that they don't comply with the conditions. I think that's one of the very common problems that we find during our audit with some of these companies. And there are some companies, when we go and visit them, and they will, and when we do some, when we carry out a substantive audit on some of the records, we can find that there could be volumes of records that are not declared a sales tax in their process of keying into their system. This could be due to very simply the coding errors in the accounting system, or it just somehow some records are not keying into the accounting system, and all this can happen, right, during our work. Yeah, and for some cases, although they are manufacturing, although they are manufacturing taxable goods, they just forget to license, or their license late, or some don't even bother to license because they believe they are not subject to sales tax, depending on the way they argue about their description of the products that they're making. They assume they are not making taxable goods. So these are some of the areas where we find errors can happen, right? And also, because of the sales tax regime in Malaysia is a single stage tax, a lot of manufacturers then are very creative. They set up trading company or connected parties to do trading activities. So they will manufacture their goods and sell to the trading company, of course, at a very depressed price. And that is the reason why the customs do not like when there are a lot of intercompany sales and the price are not based on the sales tax valuation. So this is quite common. I mean, the customs are aware about it, and they are doing a lot of audit on this kind of arrangement. Not only in the past, but even now they're doing this. Yeah. So these are some of the common problems that we face. Similarly to sales service tax, we have the same story like the sales tax. It was already implemented sometime in 1975. It was only abolished when GST is introduced in April 2015. So the service tax is only imposed on services company that are providing taxable service. Again, there's a long list in the Schedule 1 of the service tax regulations that will outline all the taxable services. Yeah, and of course, the service tax rate is at 6%. And of course, in our latest 2018 service tax version, we also have imported services tax, which was not on in the 1975 Act. In the 2018, when we introduced service tax, we bring in imported services tax, which is quite similar to the GST imported services. Meaning, if you are a company in Malaysia and you pay for services outside the country, and these services are the type which is taxable services in Malaysia, you have to then self-account a service tax, meaning you have to pay the service tax as though you are buying it from a company in Malaysia, and you have to file a return and pay the service tax at 6%. Of course, if you are licensed, you can do it via your bi-monthly service tax return. But if you are not licensed, you are still required to file a return and pay the tax accordingly. You pay the tax in the following month after 30 days of your so-called payment to the service provider. And of course, similar to sales tax, there are persons that are qualified for exemption. For example, if you are a group of companies, you do not have to charge service tax when you supply to a group of companies, or when you are a licensed company selling services to another licensed company doing the same type of services, there is also exemption. And of course, there is also persons, those service provider located in duty-free area, located in the so-called free zone, MW, and other designated areas, they are also not subject to service tax. Yeah. So these are some of the, this is the concept of the service tax. Sorry, I think I lost the slide. Hongkit, sorry about that. I think there's some technical issues.
Yep, just hold on. Let me get the
Yeah.
slide up and running again. I got disconnected. Sorry about that.
No problem, no problem. I think I was at the so-called introduction of the service tax. So these are some of the common errors we will find, as far as service tax is concerned. Very common. There are many service providers. When we talk to them, they will claim they are not doing any taxable services. When you analyze further and dig deeper into their type of services they perform, they're actually providing taxable service. For example, they're doing testing. The word testing is not listed in the service tax regulation, of course, but it is provided in the guideline or provided by the custom, or has been a practice by custom to testing services. Yeah. And also, it is quite common because of system error. The system will not pick up certain transactions, or certain records for some reason are ignored during the data entry level, right? So that's the reason why for some returns there will be some underdeclared portion of their service tax for some of the records which is missing for some reason. Yeah. And the common one we find is that there are a lot of unlicensed service tax people, service tax persons in Malaysia. They are not licensed, but they have made a lot of payments to foreign service provider, and they never account for important services. And this could be one-time bomb for a lot of people in Malaysia. Yeah. And of course, as I said, we have a lot of exemption relief available for the service tax persons, but the conditions you must fulfill, right? And the common error is they don't fulfill the conditions. Yeah. And of course, taxable services, they're doing taxable services, or they believe they're doing non-taxable services, but they are actually not correct in their facts. So this could be some of the problem, right? And of course, late registration, they don't register at all for the service tax. And when the custom find out, then you will advise them to go for the VA program. So this is some of the common ones. As I said, we cannot list out all the problems we face when we do our audit, but these are some of the very common problems we can find as far as service tax is concerned. Now we'll move to the GST side and also the custom duty side. GST, I think everyone knows about it. We have GST since 2015 April. It was abolished on 1st September 2018. As far as GST is concerned, it covers all supply of goods and services. There is the standard rate, which is at 6%, and zero rate. But there is also another category of supply which is exempted, which is called exempt supply, which you do not charge GST. There's a difference between the two. For the standard rated supply, you can claim input tax credit. But if you are doing exempt supply, you cannot claim input tax credit. So that is the major difference between the two. And of course, we also have those exemption available for those who are located in the free zone, in the MW, and also in the designated areas. Yeah. So these are some of the reliefs available. Yeah, for some of the in the GST regime. So this is the background of the GST, and therefore you can appreciate, yeah, some of these problems may crop up. Yeah, as I said, when the GST was repealed in September, but there is a filing required where we call it the final filing of all the GST return on by December 2018. So that could be a lot of errors because everyone was rushing to file the final return. Everybody was claiming or unclaimed and make a lot of adjustment to the final return, and that's where a lot of the return can be incorrect. at the final GST return in December 2018. And again, why some companies do not declare the GST return is basically because some records are not picked up by the accounting system. Some is because of the design fault in the accounting. They will ignore certain codes. Yeah. So this is some of the common one we can find. Yeah. And of course, some companies are doing standard rated supply, some are doing the so-called exempt supply at the same premise or the same company, and therefore you need to apportion the GST input tax credit. And most will get the formula wrong in the apportionment. Yeah. Of course, incorrect returns, they are supposed to be licensed, they are not licensed, so that can be wrong. And some just simply claim input tax credit when there's no valid input tax record, yeah, or input tax invoices to claim, and so on. These are some of the common ones that we can find from the GST regime. And on importation, I think we in Malaysia have import duties on most importation of goods and also exportation of goods. We have export duties. It is covered by the Customs Act. So depending on the tariff code that you import and also the country of export that you're bringing the goods into, because some the rates will range from very small rates to very high 40 or 50% custom duties rates. Yeah, it depends on the tariff code. And because Malaysia have concluded many FTA with many countries or many economic zones, some of the countries, when they export goods into Malaysia, the custom duties can be zero. Yeah, for example, China. Of course, China now we have the RCEP, and of course in some countries like Vietnam we have the CPPT and also the RCEP, and also AFTA, we have ASEAN also. So all these, when you look at the countries of exporting, they do have this form for you to fill in or attach together with you when you import, that will say that they qualify for zero rate or at most very nominal rates when you import. Yeah. And of course, some persons, when they are located in the free zone, free commercial zone, and also in the free duty islands, they do not have to pay import duties when they bring the goods in. Yeah. So these are how these custom duties are operated in Malaysia, and of course, the custom has set up a lot of controls at the ports, airports and seaports to make sure all goods coming into the country are paying the right taxes. They also set up border patrols, random patrols, and also post-import audit to make sure everyone pay for the right amount of import duties upon their arrival into Malaysia. So this is how our import duties works in Malaysia. And these are some of the common problems we find when we discuss with our clients. Very often our clients will depend on the freight forwarder. As far as importing goods is concerned, they will follow the instruction of the freight forwarder, and the freight forwarder will declare based on their experience. They'll declare based on the harmonized code or tariff code at the checkpoint, and they will clear it based on the lowest rate possible they can find. And most often these are all wrong because, as I said, sometimes the freight forwarder may not understand what you are bringing in. They may not understand what is the products that you're bringing or equipment you're bringing in or products you're coming in. So that could be wrong. And some companies are located in free zone, MW, even free commercial zone, and also in the free duty islands. They are exempted from import duties, but there are conditions imposed on those. So those conditions sometimes are not fulfilled, right? And some are even more creative. They just simply declare a value when they import the goods. They will assume these are the transaction values when they import. And sometimes they let it go immediately because of the volume of transaction each day. They clear the cargoes at the checkpoint. But the custom, when they come to your office to do a Pascal audit, which we call as post-custom audit, or post-importation audit, most likely they'll find something wrong with your value of your declaration. Yeah, and of course, smuggling activities are quite common, and that is another area where I think currently the custom is focusing a lot. So there is some of the common problems that we always find when we do a review for our clients. Yeah. Now we move to the next one. It's basically, as what Hong Kit has mentioned to all of you earlier, there is this remission of penalties. Yeah, these are the common general penalties, whether it is in the custom duties, in the sales tax, service tax, or even GST. These are some of the common penalties that you can find. Yeah. So what Hong Kit is explaining to all of us earlier, what are the penalties amount that you're saving? Yeah, these are the amounts that you're saving. Yeah, so just to let you know, we are talking about a lot of monies here, because it depends on the periods that you are volunteering for the VA program. Yeah, so these are the potential savings that you can get depending on the years or the periods of your VA program. Yeah. Next one is on some of the so-called planning that you can do. These are some of the planning you can do or preparation you can do for your VA, or also post VA. What can you do to make sure you don't repeat some of those errors and problems? And these steps are not rocket science steps. These are all quite, I would say, self-explanatory steps that you can do. Yeah, I just list it down for you for your reference. Yeah, this is not necessarily in that order. You can mix. We can mix it. You can cut and paste or put it into your SOP. Yeah, you don't have to copy all. You can pick and choose what you feel is important for your supply chain and also for your business model. Yeah, but of course, like for example, carry out a GST review, health check before you do a VA. Of course, that is obvious that you must do. And of course, because as what Hong Kit mentioned, you need to pay completely before those benefits is entitled for phase 1 or phase 2. So you've got to make sure you have, number one, you've got to understand what is involved, how much is involved, what is the cost to you, yeah, what is the cash flow to you in order to qualify for the VA program. You've got to make good for all the payment in the VA program. Otherwise, it is not going to be useful for you, right? You cannot pay half, you cannot pay 1/4, you got to pay all. Yeah, so a cost analysis, cost benefit analysis of course is very relevant. Yeah, and of course, I think once you are doing the VA program, you are preparing the VA program, I believe you will engage your own teams or internal teams, external teams, or even your internal audit teams to help you in quantifying your so-called your potential tax that is applicable. What you may want to do is to validate that amount with external parties or either with the customs, yeah, to make sure you have the right amount that you are going to budget for, yeah, in order for you to make good that amount before the expiry of phase 1 or phase 2. And of course, yeah, if you have the resources, I think you should have a good SOP to make sure if you are importers, you got to make sure you do post-import review or post-export review to make sure you are not wrong in the classification of the goods. Yeah. Of course, in the future, if you can, please conduct an indirect tax assessment on a periodic basis. You can choose certain quarters or certain half-yearly basis or yearly basis to make sure you do not have non-compliance, especially for those who are enjoying relief or exemption. I think it's more important for you to make sure you don't run foul of the criteria or conditions for the exemption. And of course, you got to make sure you have all the undeclared amount for all the taxes that is involved in order for you to prepare for the VA. The next one is more or less the same. I think in the next slide, you will see that, getting confirmation from custom or even your consultant or tax agent to make sure you're on the right path. Yeah. And of course, getting good SOP for the future after your post VA. Yeah. And there may be planning that you can do, because once you realize you have some problems or some issues with your current review, especially you are a group of company and you are still somehow not able to enjoy the relief, then you got to do some planning about it. Yeah. Or you have some associates, but you may want to turn it into a group to make sure you enjoy some of the relief from service tax. Yeah. And of course, you should look at a new business model that you want to inject. Now, a lot of people are moving into digital business model. They're no longer on a brick and mortar model. So how would that impact your indirect tax on imports or even some of the imported services? So these are some of the areas that you may want to include into your SOP. Yeah. And the last but not least is, of course, records. I think the records is key in anything we want to do, even for the preparation of your VA or even for your future so-called plan. I think records is key. If you do not have records, I think we may not be able to win our case, whether at the custom dispute resolution or at the courts. Most of the courts will look at records. So record is always key, and there's always our advice to all our clients is that keep the records so that you can have a good case. So I think that's I have for all of you today. The next slide basically is what we can help you. Yeah, of course, these are the areas I can help. I'm not going to do a lot of marketing today. I'm going to pass it back to Sean, who is going to take us to the Q&A session. Sean, back to you.
Myself?
Yeah.
Okay. Okay.
Yes, we can hear you loud and clear.
Thank you very much. Quite comprehensive. The issue here is I don't see much questions been asked. I think it's maybe because this whole voluntary amnesty thing can still be quite scary, right? It's quite scary because I can apply, there are so many conditions, and at the end of the day, I may not know what would the outcome be. So it's quite challenging for taxpayers. So in this light of this voluntary amnesty, the government has actually done one couple of years ago. This is for direct tax, is it, or personal tax? I can't remember now. From your experience, what was the take-up like? Were there a lot of participation for this voluntary program?
Yeah, good question, Sean. I believe you're referring to the 2019, where we have our first voluntary disclosure announced by our ex-finance minister then for direct taxes. You are right, it's for direct taxes. And the take-up rate was actually quite good. Our government collected an extra 8 billion ringgit in tax, including penalties for 2019 in the budget. It was announced they collected 8 billion. This is in addition to the normal tax revenue that they have collected. So they believe the VA program in 2019 was quite good. Yeah, it more or less quite close to their target of 10 billion. So they didn't set a very high target for our so-called VA program for 2022, which is for indirect taxes. They only set about a budget of 1 billion ringgit. Yeah, so it is lower. I do not know why they set a lower, because in terms of the volume of trades in Malaysia is close to 1.3, 1.4 trillion ringgit a year. So and we know either the sales tax or custom duties is all based on the volume of transactions. So I do not know why they set a very low target. Whether they will be as successful as the 2019 VA program, I hope we can help the government to collect some revenue. I think the government need revenues in 2022 to pay for a lot of the COVID expenses that they have budgeted or even now still spending on the COVID expenses. So I hope it is successful. Yeah, so that's what I can say for now.
Okay. Yeah. So I guess that's what it is like at the moment. The setting of a low target, I can only speculate that it's about optics because there's a whole slew of things that's coming through. The minimum wage was just passed yesterday, and so it's just that the economy is recovering. So I think it's just makes sensitive if you were to have a very ambitious target to it, right?
Yeah.
We are also seeing quite a lot of action taken by the IRB and even customs in more aggressive, and it is a slight consternation to the business environment nowadays because they were all still struggling to recover from the last 2 years of shutdown. Yeah, I think that's what is maybe why people are not taking up this option as much as the last option, because it could also be trust, right? Because it doesn't guarantee that they won't come after you after, right, the amnesty period. Yeah, it's a fear factor, okay. We don't seem to have any more questions, so maybe we can wrap up. All right. Okay, Ka-Siong, any takeaways before we wrap up?
Well, my 1 minute takeaway for all of us, I think what you pointed out earlier is correct. Trust and the fear factors in our community. I think, well, there's no guarantee that the customer will not come back like in the past. There's also no guarantee that the IRB will not come back to you once you do the voluntary disclosure. But what I can advise is that if you really have a case and you really have some undeclared amount of taxes, I will urge you to do it because this is once in your lifetime an opportunity for you to come clean. And if you want to do it, I will suggest that you do it with 100% disclosure. Means you got to make sure when you carry out your VA preparation, you carry out with all records available, and you keep all those records even though you do not need to furnish to the customer, because you may not know when they're coming back to haunt you. So you keep all those records, keep all the data, and then because you're doing 100% check and you are disclosing what you owe them, I believe you may save on the remission of the penalties and also some discount on the tax. Example, if you have 1 million that you have under-declared, if you can qualify for the 30%, that is a lot of money that you have saved. So I would suggest you to do it anyway. Yeah. Hongkit, you want to share something?
Yes, Hongkit.
Yeah, I just want to echo what Ka-Siong is saying, because we are in the end of April now, and under phase 1 we actually have 2 months left only under phase 1. So I would advise all companies to actually consider going for the phase 1, since we still have 2 months time, and to actually enjoy the higher remission incentive, because to be honest, the incentive will be less attractive under phase 2, although there is still incentive, but it will be less attractive. But that doesn't mean that the company should not go under phase 2 as well. If they can't make it under phase 1, they can still go under phase 2, because after phase 2, after this whole voluntary and disclosure amnesty program ends, the VA program ends, I doubt customs will actually introduce it in the near future. probably maybe like a few years down the road again, once they have introduced GST back, maybe perhaps GST will make a comeback, and that's where they will start to do the closure audits for the sales tax as well as the service tax. So maybe at that point of time, there may be a second round of voluntary disclosure. We are not sure yet, but given that it is currently up and running now, I think it's the best opportunity for businesses to take up.
Yeah, it's a good one. I think I agree with your advice. One, you can't have something which, let's say it was a mistake, and then it becomes legacy, it carries on, and then you always have this dagger hanging at the back of you. I remember when Malaysia went into the PCB, there was a period where there's like an amnesty for those personal taxation, and I could remember it was quite a relief. Then everything all get washed up there. Be done with it, clean slate, and move on like that. So that should be a good advice. And of course, working with PKF consultancy in your queries, don't have to sit there and worry about it yourself. Just go and see PKF, talk to them and see what they can say. But it's a good idea to actually come back with a clean slate, right, and start your own business again. Okay. There's one thing that you did mention too, just since that we have quite some time left, or maybe I've been just out of topic, but it's still indirect tax. It is e-commerce that you're talking about. The government has actually talked about this, low value taxation and stuff like that. And we are getting very different signals from customs. How do they intend to take who is then liable to actually do and pay that so-called low value goods tax? The liability, is it on the platform like Shopee or Lazada, or is actually the seller? So that's where the scary part of it. Then it's also about, is it 5%? Is it 10%? Is it, I don't know how they do it. Yeah. So do you have some insights to this, Kasio?
Yeah, hey, thanks. So that's a very good, that was a very good point. It was actually raised or proposed in the budget 2022. It is supposed to be operative or operation by March this year. Somehow it was extended until June or July this year. I think it was deferred on the implementation of these low value goods. Actually, right now, because of the existing law, low value goods and are not subject to sales tax because of the relief available for up to 500 ringgit. Any goods coming into the country are not subject to sales tax because of the design of the exemption or relief. But because of the volume of trades over the internet, the government is believing they are going to lose a lot of revenues, because if everyone in Malaysia keep buying online and all of them are buying at small value, I think government will lose a lot of money. So that's the reason why they pull back or withdraw the 500 ringgit exemption. So they're going to design the law so that whoever now buy through the net for those small value goods, the one who's going to sell those goods will have to be liable for the sales tax applicable, depending on the tariff codes of all those goods coming in, right? As I say, it depends on the type of goods you are selling. Some could be taxed at 5, some could be taxed at 10. But depending on the tariff codes, now all of them will be subject to sales tax when you bring it in. And of course, the easiest one for them to pick is, of course, the platform holder, because the platform will be easier to monitor and manage by the custom. So they're going to design the process and procedures so that someone would now have to collect from the portal, whoever Malaysian buying things through the net, they will want to ensure every purchase for low value item coming into the countries, they are able to collect the sales tax accordingly. So that is the reason why they will have to design the laws, the procedures, the process, and the invoicing in the future to make sure all the platform players or maybe the agents or selling agents are able to cope with that declaration in the future. I think that's what is going to happen. I think they're going to come up with the guidelines very soon. I think it's still in the drawing board very soon. Well, my feeling is we already have the digital tax. We already have the guide on digital tax. It will very likely follow the digital tax model in the way of them monitoring and ensuring the platform players are able to collect the service tax on all the digital services that are downloaded or consumed via the net. I think they will use the same model as far as the sales tax is concerned, so that it's easier for the custom to collect from a point, from one person, rather than so many sellers through the portal, right? So I think that is the model they're looking into.
Yeah, yes. I mean, there's also legal definitions. How do you determine the value? Then they say that those coming in from the sea is not part of this, only if they are air freighted in. Then if they're bringing in bulk quantities, how do you determine whether they are above 500, below 500 and stuff like that, right? I could have a box of 25, at 5 ringgit each. That kind of stuff is still quite a lot of definition, right? So because the platform people are all our members and they're part of the digital economy group, and they were all very frightened, not to say frightened, like very anxious that the government is not fully engaging them to understand the difficulties of these things, right? So just a bit of an insight from you. Yes, pretty good. We are all
I feel MICCI can now talk to the custom because of our digital base that we have. I think we should talk to them that you should engage us early, so that when you draft the regulations and the guides, you got to put in all those cases, all those scenarios that we, as we are in these platform players, we see all these problems. And I don't believe custom knows about all these problems because they are, I would say they are not familiar with all the digital environment. So they may not know a lot of the things that our digital players are aware. And I think if they don't engage with us and they simply use whatever existing law that they have in the digital format, it may not fulfill some of the right requirements or criteria that we have. So I think MICCI now can play a role, I think, to help our digital players.
Yes, that's what we've been actively doing, trying to engage with them. And they were very piecemeal. They don't want to have, as a group, to sit with them, to engage with them. What they did was they just went and saw one by one individually, asking different questions, that kind of thing, right? But anyway, you're right. We are trying very actively to engage. We are trying to actually even have an appointment to see them, and they themselves were at some stage didn't know who is in charge of it, and there were several parts of the organization talking to various platform people. Anyway, that's besides the point. All right, so I think we can wrap things up now. Thank you very much for you guys, and for those who are attending this. Look out for the next episode that's going to come in by PKF. There's a few things coming on. I think the next one has to do with foreign source income. Stay tuned and see you guys next time. Thank you very much, Kasyong and Hongkit.
Bye-bye. Thank you, Sean. Thank you, Anisha. Thank you. Bye-bye. See you.
All right.
Selamat Hari Raya to all those.
Selamat Hari Raya. Selamat Hari Raya to everyone.
All right.
Bye.
Okay. Have a good holiday, everyone. All right. Bye.
Yep. Bye.
All right. Thank you.
Bye-bye.
Thank you.